Well, hi everybody, it's Becky here from sirencrypto.com, and today I'm going to talk to you about a really exciting subject. It's how to use and trade support and resistance levels so that you know when to buy and when to sell for the highest profit. One of the essential things to master as you find your footing in the crypto market is the art of learning to recognise and trade support and resistance levels. It's a really simple technique with big value. Firstly, here's our disclaimer. This tutorial is for educational and illustrative purposes only. We are not responsible for any investments made applying this information or buying or selling recommendations. Siren Crypto are not licensed investment advisors. We make no recommendations to purchase or sell any kind of coin, option or security. Any investment contains risk and is 100% the responsibility of the investor to assess the risks and rewards involved. Trading the crypto market involves a high degree of risk, and you may incur financial losses if you engage in this activity. We at Siren Crypto take no liability, assumed or implied, from your application of the information we share within our training programs. Well, what is a support level? Well, the support level of a cryptocurrency is the value currently believed to be the lowest value the asset can fall to, known as the floor of the market. A support point is believed to be an ideal buying point or safety zone. The idea is that the price is more likely to rebound from this level rather than fall through it. However, if the price does break through the support, it is likely to continue falling until meeting another support level. You're now wondering, how do you find a support level? Well, the best way is to compare data from previous highs and lows. If you draw a trend line on the chart where support levels are being tested, you can get a good idea of where the market has been bouncing from. The strategy is really easy, but don't let it trick you. You will find it very simple to draw trend lines, but predicting the future is not going to be that simple. Remember to zoom out on the chart so you get a view of the whole picture before defining the support level. It's also a good idea to check how the cryptocurrency in question has responded previously. Learning this could help you predict the future support levels or dangers that may arise in similar trading windows. Next, we're going to look at resistance levels. So what is a resistance level? A resistance level is opposite of a support level. A support level is the floor of the market. Therefore, a resistance level is the ceiling of the market. At a resistance level, the asset is perceived as overvalued. In most cases, buyers will exit their positions and take profit. This is also an opportunity for traders to look for short positions. The next question is, how do you identify a resistance level? This is similar to finding support levels. You analyse a chart and draw a horizontal trend line. When finding the resistance level, your line should be drawn at the top of the chart to trace the peaks. Make sure there are 2 or more points that the price touches in the same place. So how do we apply this to crypto trading? Well, once you've drawn in the support levels, you can use them to plan when you buy and when you sell. For instance, if you are in a bullish market and the price hits a strong resistance level, you may take your profit before it starts to retrace. If the crypto asset breaks a resistance level and the new support holds, you may want to look for new opportunities to add more long trades from the new support level. So this means that a resistance level after a breakout becomes support, and support becomes resistance after a breakdown. So what happens when levels are broken? Well, it can be hard to tell how high or low the asset will go. After trading erratically for some time, new support and resistance levels will form. The asset will either return to its previous levels or break out further. Longer-term charts can be invaluable when you want to find out how a cryptocurrency asset has responded to previous breaks. They can also give you a baseline on which to gauge your next move and help you to predict the price movements with confidence. In another video, we have covered the best support and resistance trading strategies. On the chart in front of us now is for one chain. Now you can see on this particular coin that it was bouncing through a channel of support and resistance before finally breaking out. The trade itself gave over 130% profit after it had broken through the resistance line. Now, to help you find major support and resistance levels, we do recommend the 100 Eyes Crypto Scanner Telegram alert bot. This will help you to stop spending hours searching for trades and spotting support and resistance levels. You can customize your bot and your alerts by time frame, and the bot will alert you to, for example, support and resistance levels, MACD cross, Bollinger Band squeezes, Fibonacci retracements, etc., etc. All popular indicators are available for all coins on the Binance and BitMEX exchanges. The link for your free trial is down below, and it's also on the website sirencrypto.com. So go and take your free trial and thank us later. Lastly, some final tips. Avoid placing orders at major points since there's a lot of volatility around these areas. Take care not to place buy or sell orders directly at these levels. The reason being is there is a good chance the price will not hit those exact levels. Use approximate margins for placing orders, and never, ever, ever forget to use a stop loss if, for instance, the trade doesn't go as expected. We have covered stop loss on a separate video. Well, I hope you enjoyed learning more. Visit us at sirencrypto.com and take a look at some of the ways that we can help you increase your knowledge and be more successful in trading. I'm Becky. Thanks for watching, and I'll see you on the next video. Happy trading.